Hi there traders, this is Steve Money, the market chartist for FX Explained and our regular weekly macro watch update. Now we've been away a couple of weeks, but we're back again in full force from this week, the week commencing the 2nd of August 2021. Chinese stocks plunge, a dovish Fed and an Amazon sell-off, but still a risk-on mode. So let's take a look at those macroeconomic and geopolitical developments over the past week. But before we do so, don't forget to hit that like button and also to follow us on our YouTube channel. So, a regulatory crackdown by Chinese authorities last week on a large number of internet stocks saw Chinese share indices plunge lower and also saw some delayed and limited contagion effect on global stock averages. In the middle of the week on Wednesday, the Fed voiced a slightly more hawkish tone in their statement, but a slightly more dovish tone came from Chairman Powell, stating the economy is still a ways off from substantial further progress. On Thursday, we saw Amazon earnings. They were worse than expected, seeing the stock plunge lower, but broader market indices weathered the Amazon storm. And the ongoing global threat spread of the COVID-19 Delta variant has left markets somewhat vulnerable to sporadic risk-off moves. So let's take a look at the global financial market developments for the week ending the 30th of July 2021. Well, equities stayed firm as we've said in this. Still bullish, the S&P 500 hit another new all-time high at the end of last week, despite a dip lower at the very end of the week, still maintaining an underlying bullish theme. Yields continued lower, US yields pushing lower after that Fed statement and Jerome Powell's signaling a still potential for a more dovish tone in the short to intermediate term. The US dollar index weakened in here, US dollar weakening on the back of those lower yields, and euro dollar did bounce, but the underlying theme for the euro versus the dollar is still negative despite that bounce, with the US dollar broadly weaker after the Fed. And the pound did put in a very strong recovery, though stronger than we saw against the euro versus the dollar. The pound versus the dollar pushing up close to 140 from 136, below 136 at its lowest point, easing negative pressures that we've seen in here through June, July. Gold did rebound in here with that US dollar weakness, as secured a base and pointing higher. And oil has continued its push back higher, having a sell-off in here through mid-July from a multi-year high that we posted in the beginning of July. We did see that sell-off through mid-month, but a strong rebound and trying to resume the underlying bullish pressures that we've seen throughout 2021. And copper also in here, trying to bounce, securing a base, rallying through the last couple of weeks and consolidating those gains last week. Let's now take a look at the week ahead, the week commencing the 2nd of August. Well, we're still going to monitor the global spread of cases of the COVID-19 Delta variant and watching for further easings of global lockdowns. On the central bank side, we get the Reserve Bank of Australia on Tuesday, and we get the Bank of England interest rate decision and statement on Thursday. And we have a slew of economic data in here. So we have PMI data, global PMI data from Casin, from Market, and from the ISM on manufacturing PMI data Monday. We get the RBA interest rate decision and statement on Tuesday, with New Zealand employment report also Tuesday. Wednesday brings Australian retail sales. Again, further PMI data on the service side coming out on Wednesday. We get that Bank of England interest rate decision and statement on Thursday, and we finish off with EU industrial production, but probably most important of the week, the US employment report, alongside the Canadian employment report as well, on Friday the 6th of August. I'm going to wish you all a great trading week. Please do remember to hit that like button and follow us on our YouTube channel, and I'll be back with you soon for another macro watch. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.